Should I buy Bitcoin now? Discover the hidden risks and huge opportunities. Are we on the brink of the next big Bitcoin surge, or is this just another market trap waiting to take your money? Picture this. The world of finance is rapidly evolving, and Bitcoin is at the center of it all. In the past, early investors in Bitcoin have seen astronomical returns, while others have watched the market crash and their portfolios evaporate. With so many unpredictable twists and turns in the crypto world, it's easy to get swept up in the hype. So, should you buy Bitcoin now? Or is it better to wait? Stick with me to uncover the full picture, from the massive opportunities to the potential risks you need to consider before pulling the trigger on your next investment. Number 1. Potential for long-term growth. Bitcoin's potential for long-term growth is one of the most compelling reasons to invest. Over the years, Bitcoin has shown itself to be a top-performing asset in terms of growth. From less than $1 in its early days to reaching over $60,000 at its peak, Bitcoin has proven to be a valuable store of wealth for those who have held on to it for the long haul. With the scarcity of Bitcoin, only 21 million coins in total, its value is expected to rise as demand increases over time. But this is not a get-rich-quick opportunity. It's a long-term play. As more institutions and individuals realize the importance of digital currency, Bitcoin could see substantial increases in value. Still, remember that the road to long-term success is often filled with volatility, and it's important to be prepared for both ups and downs in the market. But as you think about the long-term growth potential, you need to ask yourself, can Bitcoin continue its upward trajectory? Or are we headed for another bubble? Keep watching to find out how the upcoming events might shape its future. Number 2. Halving event impacts. Every 4 years, Bitcoin experiences a halving event, where the reward for mining Bitcoin is cut in half. Historically, this has had a massive impact on the price of Bitcoin. The halving reduces the rate at which new Bitcoin enters circulation, which decreases its supply. The last halving in 2020 led to a significant price surge, and many believe the next halving event, scheduled for 2024, could spark a similar bullish trend. However, it's essential to note that while past halving events have seen price increases, this doesn't guarantee that the pattern will continue. There are many factors at play in the market that could impact Bitcoin's price, so while the halving is an event to watch closely, it's not an automatic signal for buying. Number 3. Institutional interest. Bitcoin's adoption by institutional investors has dramatically increased in recent years. High-profile companies like Tesla, MicroStrategy, and even investment firms like Fidelity have added Bitcoin to their balance sheets. This institutional interest has given Bitcoin more legitimacy and shown that big players in the financial industry see value in the digital asset. Furthermore, with major financial players now offering Bitcoin-related products like ETFs, there's a growing ecosystem around Bitcoin that could drive its price higher. However, it's important to keep an eye on the macroeconomic factors that influence institutional investments. These investors also have the power to move the market, and their decisions could lead to price fluctuations. As institutional interest grows, so does Bitcoin's visibility as a legitimate asset, but it's still subject to larger financial forces. Number 4. Current market sentiment and trends. Bitcoin is riding a wave of positive sentiment at the moment. Social media, financial platforms, and even mainstream news outlets have been buzzing about Bitcoin's potential. The increased awareness and interest from the public are driving prices up as more people believe in Bitcoin's future. There's a strong belief that Bitcoin will play a central role in the future of finance, especially as central banks explore digital currencies. However, it's important to understand that market sentiment can change quickly. Fears of government regulation, economic uncertainty, or even negative press can cause the market to swing drastically in the opposite direction. This is why it's critical to stay updated on the latest news and trends surrounding Bitcoin before making any moves. Before you make your decision to buy, make sure you're fully equipped with all the facts. If you want to stay ahead of the game and avoid common mistakes, make sure to hit that like button and subscribe to this channel for more insights. Let's keep going, because there's a lot more to this Bitcoin puzzle. Number 5. Growing global acceptance. Bitcoin's global acceptance is steadily growing, and this is one of the most significant drivers behind its value. Countries like El Salvador have already made Bitcoin legal tender, and others are considering similar moves. Additionally, more businesses are accepting Bitcoin as payment for goods and services. The broader Bitcoin ecosystem is evolving as well, with Bitcoin-friendly companies and platforms springing up all over the world. The more people and businesses that adopt Bitcoin, the more integrated it becomes in the global economy, which only increases its value. However, Regulatory uncertainty remains a major concern. Different governments have varying stances on Bitcoin, and some countries may choose to ban or restrict its use. This could have an adverse effect on Bitcoin's price and adoption rates. Number 6. Hedge against inflation and economic uncertainty. Bitcoin is increasingly being viewed as a hedge against inflation and economic uncertainty. With central banks around the world printing more money and governments increasing debt, Bitcoin's fixed supply makes it an attractive alternative to traditional currencies. Bitcoin has been referred to as digital gold because, much like gold, it is seen as a store of value during times of economic instability. When inflation rises, Bitcoin's value could increase as people turn to it to preserve their wealth. However, Bitcoin is still a relatively new asset, and there's a risk that it could be more volatile than traditional assets like gold. While Bitcoin has performed well in recent economic crises, it's not entirely immune to macroeconomic shocks. Number 7. Diversification of investment portfolio. Bitcoin can offer valuable diversification for your investment portfolio. Unlike stocks, bonds, or real estate, Bitcoin doesn't always move in correlation with traditional assets. By adding Bitcoin to your portfolio, you can reduce your exposure to risk in other areas of the market and potentially increase your returns over time. It's important to view Bitcoin as part of a diversified portfolio rather than as a sole investment strategy. Over-concentrating your wealth in any one asset class can expose you to unnecessary risk. Bitcoin's volatility is something to consider, so it's essential to balance it out with other investments to protect yourself in case the market turns against you. However, there are some reasons to be cautious before making your move. While Bitcoin presents numerous opportunities, it's important to weigh the potential risks involved. No investment is without its challenges, and understanding these obstacles will help you make a more informed decision. Here are 5 reasons to be cautious. Number 1. Volatility. Bitcoin is famous for its volatility, and this is both a blessing and a curse. While the potential for massive returns exists, so does the risk of significant losses. Bitcoin's price can swing drastically in a matter of hours, and investors need to be prepared for the emotional roller coaster that comes with it. If you're not comfortable with the idea of seeing your investment fluctuate by 10%, 20%, or even 30% in a short period, Bitcoin might not be the right choice for you. Patience is key, but only if you can stomach the ups and downs. Number 2. Macroeconomic factors. Bitcoin doesn't exist in a vacuum, and macroeconomic factors can play a big role in its price movement. Changes in interest rates, global inflation, or even political unrest can all affect Bitcoin's value. For instance, if the Federal Reserve increases interest rates or if there's a financial crisis, Bitcoin could experience significant price drops. Investors should keep an eye on the broader economic picture and be aware of how external factors might impact their investments. Number 3. Portfolio diversification. While Bitcoin can provide diversification, it's essential not to overcommit to any one asset. Bitcoin is still a highly speculative investment, and putting all your money into it can expose you to considerable risk. A well-balanced portfolio should include a mix of assets, including stocks, bonds, real estate, and potentially some exposure to Bitcoin. Diversification is key to managing risk and protecting your long-term financial health. Number 4. Regulatory uncertainty. Bitcoin and other cryptocurrencies face a constantly shifting regulatory landscape. Different countries have varying laws regarding the legality and taxation of crypto assets, and these regulations can change rapidly. For example, a country may suddenly impose stricter regulations or even ban cryptocurrency trading, which could cause significant price volatility and uncertainty. Investors should stay updated on global and local regulations that may affect Bitcoin's future, as regulatory crackdowns can have a dramatic impact on the market. Number 5. Security risks. Although Bitcoin itself is secure thanks to blockchain technology, individual users face risks when it comes to securing their holdings. If you store your Bitcoin on an exchange, your funds are vulnerable to potential hacks. Similarly, losing access to your private keys or making mistakes with wallet management can result in irreversible loss of funds. Security is paramount when it comes to cryptocurrencies, and it's important to use strong passwords, two-factor authentication, and hardware wallets to protect your assets. With more than 13 years in Bitcoin trading, I've witnessed the market's highs and lows, and I've learned that successful investing requires more than just jumping on trends. If you're considering buying Bitcoin, it's crucial to approach it with a strategic mindset. While the opportunities are vast, smart investors understand that preparation and discipline are just as important as timing. That being said, here is 5 pieces of valuable advice that can help you navigate the complexities of Bitcoin trading, minimize risks, and maximize your potential for long-term success. 1. Do your own research, DYOR. Before buying Bitcoin or any cryptocurrency, make sure you do your own research. Understanding the fundamentals of Bitcoin, its technology, and its place in the market is crucial for making informed decisions. Don't rely on social media or tips from strangers. Take the time to understand the risks involved and how Bitcoin fits into your broader financial strategy. Knowledge is power, and the more you learn, the more confident and strategic your decisions will be. 2. Dollar cost averaging, DCA. Dollar cost averaging is one of the safest strategies for dealing with Bitcoin's volatility. By investing a fixed amount into Bitcoin at regular intervals, regardless of its price, you reduce the risk of buying at the wrong time. This strategy smooths out your entry price and lowers the emotional toll of trying to time the market perfectly. DCA also helps you accumulate Bitcoin steadily, even when the market is unpredictable, without putting all your funds at risk at once. 3. Set goals and limits. It's essential to set clear investment goals before diving into Bitcoin. Ask yourself why you're investing and what you hope to achieve. Are you in it for the long term, or are you hoping to make short-term profits? Set limits on how much you're willing to risk and stick to your strategy. Having clear goals and boundaries will help you avoid impulsive decisions during market fluctuations. Remember, discipline is key to navigating the crypto market successfully. 4. Stay informed and adapt to market changes. The cryptocurrency market is constantly evolving, and staying informed is vital. Follow credible news sources, subscribe to updates from industry experts, and keep an eye on any regulatory changes that could impact Bitcoin. The market can shift quickly, so adaptability is crucial. Being proactive about staying updated on trends and events will give you an edge in making informed decisions. 5. Have an exit strategy. Having an exit strategy is just as important as knowing when to buy. Decide in advance at what price points you'll sell or take profits, and under what circumstances you may exit the market altogether. An exit strategy helps you avoid emotional reactions during market volatility and ensures that you're not caught off guard when major price movements happen. Whether it's a profit target or a stop-loss level, having a clear exit plan allows you to protect your gains and minimize losses. So, should you buy Bitcoin now? The answer depends on your risk tolerance, investment strategy, and long-term financial goals. Bitcoin presents a huge opportunity, but it also comes with considerable risk. If you're prepared for the volatility and have a solid strategy in place, it could be a valuable addition to your portfolio. But remember, no investment is without risk, and it's essential to stay informed and cautious. If you're still on the fence, remember, Bitcoin's future is uncertain, but so is any investment. The key is to be prepared, do your research, and approach this exciting yet volatile market with a level head. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you can stay updated on the latest trends and insights in the world of Bitcoin and investing. Share your thoughts in the comments. What's your stance on Bitcoin right now? Let's keep the conversation going.